Hey guys, welcome back. So this is the end of the month look at the market. This is the E-mini S&P 500, the ES futures contract. So there is about 23 days left for the end of the month, and I have made a 23-day distribution for the oscillator just to show the number of points left in that range. So about 200 points for 68% of the range, PT2, 34, 68, 95. 1, 2, 3. And you can see that 68% is right here in the sweet spot of our monthly ones. So that just like lines up perfectly. Plus the implied volatility mean at the current moment is 5170, just above the 58. So it is interesting to note that futures are underneath the implied volatility. So, noticing that we've got a futures price that's lower, the implied volatility mean is a little bit of a divergence. And so it could reinforce the resistance level, making the market break that at the money implied vol at 6170 when the futures is already lower. So they're pricing in a lower, people are going to be taking profits probably around that area is what I would be thinking. So want to keep an eye on gamma and vega sensitivity around the area um, because that will influence the way the market is either going to be breaking it or pulling away, or maybe just the puts and calls flatten out evenly and the market pins to the level. So we don't want to anticipate anything other than it's a strong resistance level, and we'll have to see, the market could just sit on it so that they don't lose their end of the year profits by going too low. You know what I'm saying? That would be like shooting themselves in the foot. All right, so just because it's resistance doesn't mean it's automatically going to pull off of it. So just monitor that level and see if we can leverage the Vega theta as well as just the directional move of what happens, and knowing how many points are left in the session. So we're looking for 23 days. If it breaks the 2, it goes to the 3. So we could go from 201 points to 280. And so you would add another 80 points to the upside, which would take us from here to the 2s. How about that? 77, 80, right there, 80. Oop, there. Okay, right there. So going from the 2 up will take us to the 2 here, 62.35. So this is 23 days, right? And this is 30 days. So there's 23 days left in the contract. So if we go to the maximum amount of that 23 days, would take us up to this 62.35. But otherwise, we have to first get on top of the 61.58, 61.70 area that we have been talking about. I have posted some analytics on that using Quick Strike on in the points and traders community as well as social media. So check that out. Um, there's nothing really to look on the quarterly. So basically, this is it. Just pay attention to 61.19 to 23 going into CPI, or 61 58 through 70 going to end of the year. And that's about it. So y'all have a great afternoon, and we will talk at you later.